All right, good morning, everybody. Doc Severson with you here, ReadySetCrypto here, Trade School. Today is the 8th of May. For those of you that are watching live, if you're watching this on a replay, this was a while ago, right? So today what we're going to be talking about is a little bit different topic. Today is going to be Skew components. So I got a request to talk about some of the components of the Skew.com website and how we can use those for Edge. And some other people have said, hey, wouldn't mind it if you take a look at what's going on in the overall crypto markets right now. We've had some pretty big movement over the last 24 to 48 hours of price charts. So if you are live, we can certainly go over any coins that you want to look at, any cryptos, or any other charts for that matter. So we do not discriminate here at ReadySetCrypto. Okay, so I have very few things to go over from a slide perspective. So everything that I'm going to do here is just going to be based on just going over live charts or just looking at specific things. Okay, so what we have here is the Skew.com website. And I may get rid of myself here just because I think I'm going to get in the way. So I'll wave goodbye at you guys. Let's go to a full screen so we can look at this. And so a lot of people have said, what is all this stuff that's on here? Well, let's go over these windows one at a time. And then as necessary, I'll bring over different windows to show you what we're seeing. We're not going to score cookies here today. So first of all, we're looking at the BTC spot, which is up in this area. This is just the spot price. So this is just a little line chart and really doesn't serve any other purpose than this. Now, something I want to show you guys that you can do is if you see this little photograph, it looks like a camera. You can go ahead and click that. And then what that does is that brings up a much larger snapshot of what you're looking at. And then from there, you can edit, you can do whatever you want to from it, but it shows up in your downloads. So that's a way to kind of expand on everything you see. All right, let's see if we're doing okay. Next thing is total BTC options open interest. Now, this is not relating to any specific option chain or date or anything. It's just date is just moving in a linear fashion from the left to the right. And what you generally want to see is you will see open interest increasing with the move. So we had a very flat move. Well, we had a crash before that, but basically very flat price movement, kind of a grinding move that we had. But over the last couple of days, we've seen a lot of activity. And this is good. This is what we want to see if we see the price going in the direction that we'd like it to see. This is very supportive of the market. We can also see the option volume. This is the next thing, BTC option volume. And it's got it based on several different market exchanges. Notice that Deribit is still the biggest exchange out there. LedgerX is very small, backed, very small. OKX is getting bigger. CME is still fairly small. A lot of people talking about CME, futures gaps, things like that. I don't really necessarily care that much about them because Deribit still is the biggest player in this space and has the most open interest. Most open interest and most volume means the most dominant player in the space. Okay, so generally we're seeing option volume increasing. Now we get into some interesting things that we can look at down here, which is these are the skew graphs. And what they're showing is for this specific, the volatility. So these are the volatility smiles that we have for the different months. And most of them are going to be based on Deribit, but some will be in different exchanges. So you can look at this and you can key the graph based on whether we're talking about Deribit. In this case, we're just looking at Deribit. This one's also got OKX to it, OKX, and then this one is just Deribit. So that is the legend for the graph. Now, what does this mean? Okay, so what we have here is this shows the implied volatility. This shows the implied volatility for specific options that's out there. And notice that we have some outliers here. We have some outliers like this one here. So these are call bids and call asks in blue, and then put asks and put bid in red. So let's take a look at these. And these are the May 20 options. And let's see if we can decode what this stuff means. So what I'm going to do is I'm going to bring over Deribit. And we are just flirting with that $10,000 price right now on BTC. So I'm going to bring over, and these are all May options. So what we can do is, what we need to look for is, for some of these options, we need to look for, can we find some of these outliers? Okay, so I'm going to go back to the graph for a second, and it looks like we have like a 12,000 put level, which is really, really out there. And that's not going to be on this. And so we've got to, let's go find it. So we're looking for puts that have, and there we go. We've got some 500%. What I want to show you is here is why that graph looks so weird. Okay, so we're going up in price and strikes. So I know this is backwards, but as we go down, so we have strike prices that are above 10,000. And look at this. We have the bid and the ask price. And then we have the IV of the bids, and we have the IV of the asks. And notice what's going on here. We have zero bid on these puts. Now, these are way in the money puts, which doesn't really make sense for these to be bid up. But notice that somebody has got these things just offered way, way, way high. And I don't quite know why, but this is why we're getting these sort of extreme values. Now, you may be asking yourself, like, okay, what could we do with something like that? What could we do with a 500% implied volatility? And unless you want to sell this option, which it's zero bid, and nobody's going to buy this one. So these are sort of artifacts that I don't think that we can find any use for. So generally what you do want to find is you want to find something that's way bid up out of the money. So you can see this, the volatility curve structure, as the price goes down, it actually will increase. As the price goes down, the implied volatility will increase. And that's pretty normal to see something like that. So what you can find occasionally is you'll find these levels where implied volatility is super high. You can still sell something for a pretty decent amount, pretty far out of the money. Let's go out to the next option chain. Let's see if we can see something similar to that going on. Again, a lot of these 500% implied volatility, this is why we're seeing that spike near the end of it. There's nothing really that we can do with that. Now, what you can do is you can look for areas like up here, out of the money, where you see extreme implied volatility that's out of the money that you can sell. Or you can see super low implied volatility that you can buy, which none of this is the case. So again, the edge here is to either something out of the money that's super high that you can sell, or something that's way out of the money that's super low that you can buy. And that's where you find the edge in the market. So is there somewhere down here that we can sell a ton of premium out of the money puts? Probably not. Doesn't look like it right now. Is there anything that's super low implied volatility out of the money calls that we can buy? No, either. So sometimes you have to do a little bit of hunting. Remember that every single option that's out there, put or call, has got its own market. And this is why they track the implied volatilities of the bids and the asks, looking for these types of situations. All right, so that's kind of what this is. Now let's go back to this. So you can decode here now. You can kind of find these things where we have these like super high implied volatilities. for some of these, and these are going to be OKX or Deribit, things like that. Most of the time, though, we're going to have this volatility. It's called a volatility smile. So at the money tends to be a little bit lower. Out of the money tends to be a little bit higher implied volatility. Okay, so getting past that, and this goes all the way out there, you can see December 20 has got, put ask of, extremely in the money, and it's got the super high level of IV. Just it's not really showing us any edge. There's nothing that you can do with it. You don't want to be buying an extremely in the money option for an exorbitant price. There's no edge to that. Now, if that was something that you could sell for an exorbitant edge, that's something that you might want to consider. All right, next we have the realized volatility. This is also called the historical volatility. And so historical volatility is like what's already happened. And so we can see this big jump that we had in mid-March. That's when we had the initial crash. And then since that crash, it's like come in heavily since that point. Now we've also got another chart which shows the realized versus implied. This is very, very useful because at this point now, you can see the implied is pulling out while the realized is still staying fairly strong. That generally means that that's a buying edge versus a selling edge. What I like to see instead of this is I like to see, and this is normally what we see, a lot of times cryptocurrency markets can offer different things. So if this was the opposite, if implied volatility stayed high like this, but realized volatility was starting to drop off, and it's not that way, it's the opposite, then this would be a seller's edge. A seller's edge is normally what we see in most markets all the time is implied volatility is usually overstated, and that's something that you can sell. In this case, we're not seeing that. The realized volatility is staying relatively constant. However, the implied volatility is constantly understating the forward movement, which is curious to me. And this also goes along with the issue that I brought up over the last couple of weeks where I said, hey, look, the halving, which is coming up in mid-May, is not being priced into the market. It's not being priced into the option chain, which is puzzling to me because option traders are generally very forward-looking and will generally set the forward movements for the price. And we're not seeing that. So that was odd. Okay, so this chart over here and this one over here are related in that they both show the realized volatility. Okay, so excuse me. You can now also see the implied volatility, and this is going to be 1 month, 3 months, and 6 months. 1 month, 3 months, 6 months, it's color coded. The implied volatility has been coming in, going up slightly. Okay, skew. Skew is also the same thing. It's showing the difference between the calls and the puts for this. Right now, not a whole lot of edge there. Okay, the volatility term structure. So we're going down to the next row here. Hold on a second. Been talking all day. Okay, so we're seeing the at the money term structure, and what this is showing is, let's see if we can zoom in this. Okay, so we can't do that. This is showing the implied volatility like at the money. And so right now the at the money implied volatility is lowest in the 15 May, and then it goes up quite a bit. It's common to see this rise as you get closer and closer to expiration. It's very common to see that. And then this one, I don't know what we're going to view out of this. I mean, we can generally look at this in each chain. The probability of BTC being above a certain percentage dollar or certain dollar figure by maturity. So right now, we should be seeing about a 50% probability right now because the price of BTC is about 10K. So we should see a 50% probability of that. Okay, so some of these ones down here at the bottom are of marginal value. So top BTC volumes, Deribit, 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 Deribit. You can see how like there's a lot of put selling going on. So this is Deribit and OKX, current day. A lot of put selling, which is good. Still people buying puts. Sometimes these are people buying back their short put positions. So you can't really tell what people are doing there. Sometimes they're selling the current puts, call buying, call selling, put blocked, don't know what that means. And then we're also seeing the volume. This is just more of a probability donut of just Deribit still is the market leader with 88% of the volume previous day. Here's the put call ratio. How many people are buying puts versus calls? And sometimes when that gets too extreme, if too many people are buying calls, that's a contrarian sign, and that's bearish. So again, a lot of these are interesting statistics. It's interesting to know who's the market leader in puts versus calls, things like that. It is important to know the put call ratio at extremes. Most of the time, it doesn't matter that much. Okay. Open interest change. Open interest by strike. This allows you to see like where is all the activity. And right now at the money, this is where things should be, as most of the activity is at the money. And then open interest by expiry is actually about a month and a half out. So this is also very common to see that most of the volume is people selling options that are maybe a month and a half out. So a lot of put sale happening in there. Okay. So that's kind of my read on Skew. There's some things in here that are interesting. There's just a lot of things in here that don't really matter. So if I were to look at this, some of the things that would make sense to me is like looking at the open interest going up. That's a good sign. A lot of these are just artifacts, just odd numbers that make no sense for people to, for options to be bid up that high or offered that high that are in the money. Makes no sense. There's no edge there. Understanding the realized volatility, but I think also more important than that, this is something I talk you guys through all the time, is understanding what the realized volatility is versus the implied volatility. So we're always watching the implied, but it's also useful to see what the differential is with a realized. You can use this as well too, but don't put too much into this donut here, this pie graph, which is the option flow, because you can't tell, like a put buy, you can't tell the difference between somebody buying puts to open versus closing out a short option position. They're synthetically the same thing. So don't put too much stock into this and just assume something. The rest of this are just kind of curious. Now, also watch your put call ratio. If it gets too high or too low, that will happen near market extremes, and that's a contrarian sign. Okay, so let's do this. Let's move out of this, and we shall bring up a chart. And let's take a look across the market. Now, a couple of things that I like to look at. First of all is this is AGGR.trade, Agger.trade. And this is great because it shows a 10-second chart. Each candle is 10 seconds. And it's about the most responsive one. I can't get, unless I want to upgrade my account on TradingView, I can't get 10 seconds. So if you're a short-term trader, this may be something you want to take a look at. You can also see like what's happening, what's moving the market as some of these big ones, these big orders come through, and you can also see like people that get liquidated, which is just amazing to me. Okay, so let's also look at this one here. Just our standard chart, and this shows Bitcoin. We're starting to see this a rising consolidation. We're starting to see this rising consolidation. So we saw this, when we first came off the bottom, we had this look like it was a bear flag on most of the charts, especially like Ethereum looked terrible. This looked like the worst bear flag I'd seen. But that all changed once we got to the beginning of April. And that was the date that we saw a big shift in the rest of the market too. The beginning of April showed that all of a sudden money was going back into risk assets again. So this is when Ethereum converted from being in a bear flag, in a terrible pattern, to all of a sudden showing higher highs and higher lows. And this was a character shift into quiet and trending on Ethereum. Now, Bitcoin never did look like a bear flag. This all looked like a big consolidation, and this looked like an ascending triangle pattern that broke out here at the end of April. And since that point, we've seen this sort of mode before, back last summer when we had these rising consolidations that would just go and scream and break out, which is very much unlike just about every other asset that we have. So cryptocurrencies will trend differently. They will move differently in different ways. That's not going to be necessarily reflected in the standard fractal energy. Now, it still does move through standard Newtonian physics, right? Range, contraction, up in here. So much money out there. Money is not the problem. There is so much money looking for a home, looking for alpha, that right now, Bitcoin especially, I think perhaps the word's starting to get out about the halving, but I really don't think this is a halving rally. I really don't think so. If this was a halving rally, this would have started way back here, well in advance of that. True traders hate for other people to get the edge. They hate to be late to the party. They're always early. So we'll watch this. So for right now, 10,000, let's just go over to a price chart and let's throw a little bit of volume profile on here, because that is really one of the most accurate ways of looking at a market. So we'll wait for this to come in, get rid of this, throw this on there, and we can see that we do have a little bit of an overhead spike in volume profile at about 10,000. You can see that right there. So there is some overhead resistance. There is overhead supply of people shorting it up there or taking profits at 10,000. Overhead supply can be people taking profits or shorting it new, shorting it to open at that level. So once we get above there, though, very few impediments to this thing running. Once we get above 10,000, very few impediments. Okay, let's see if anything else is moving for today. Everything else is pretty choppy. Now 0x is just exploding. Don't know what the news is, doesn't really matter, but right now 0x is just going insane. And it's also listed in Coinbase too. So this is, it's gone from roughly 22 cents and it's jumped up to 56. This looks 2017-ish to me. Basic attention token is also getting some love here today. Big volume spikes. Follow the volume. When you see volume, believe it. And just about everything else is, fairly choppy. This is not a swing trading market. This is not an altcoin market. This is a top 10, top 20 market right now, still. Because most other altcoins are based on trading Bitcoin, and that's going to make it difficult for them to move if the denominator moves even faster. Okay, guys, that is really what I wanted to talk about today based on requests. So let me know if there's any questions, and I'll hold out here for a couple of minutes and see if there's any comments or questions. Otherwise, that is it for today. I'd like to wish you guys a great weekend. We'll be back with a weekend report on Sunday. So that comes out on Sunday, and hopefully we'll have some good news to report in terms of a continued rally. Everybody likes a rally. Just about everybody, I would say. I have worked with people before that are perma bears. And I think to be an effective perma bear, I think it's almost necessary for you to hate anything and everything out there and to be constantly pessimistic about the state of the world, the universe, everything like that. So some people are just like that, and they can be there. But the problem is you got to be short all the time. It's a duration over direction kind of game to be short all that time. But things do move very, very quickly to the downside. No doubt of that. Okay, nothing heard. Thanks, everybody, for hanging out with me here today. Trade School at ReadySetCrypto. Today, May 8th. Have a great weekend. Enjoy the spring, and let's get things open again. Thanks, everybody.